Hey traders, Michael or Minifrost here. You're here for another episode of Common Sense Market Analysis. Today is Turnaround Tuesday, November 18th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Just like yesterday, we have a ton of stuff to talk about today. We had an absolute bonanza day in the live room and inside the numbers. We batted 3 for 3 trading the Spiders. A ton of traders all across the board were making money. We're gonna go over that shortly. But first, let's start with where we are right now, some important levels that we tested today, seeing where we closed above or below, and also what are some other targets that we need to be aware about later on this week. So first things first, we're down 0.84% today, down about $5.59. And just take a look at where we closed the day today. We closed at 660.08. And if you remember from last week and the video last night, we have a very crucial pivot number, a longer term pivot number that comes right around 660. We'll go ahead and make that green to represent the pivot number, and we closed 8 cents above the pivot. So technically we did close above it, but in reality, it's pretty much neutral, closing 8 cents above it. Can't really split hairs over pennies. Definitely need to see where we close, either above or below the pivot number tomorrow and throughout the rest of the week. Again, that weekly close is going to be uber important. It's only Tuesday right now, but a lot of things can happen leading up towards the end of the week. But we can give that a funny how that works, that we closed right on the pivot number. Don't you think that the market knows about that number? So getting a different perspective of the market, we're going to go over to a 2-hour time frame. Yesterday, we were talking about the importance of this breakup candle low. The low comes in at 663.27. We did have a inside bar pattern formation. We were trading within this breakup candle, and what we were talking about yesterday is that we needed to stay above and close candles above this low. And as you can see, at the end of the day, we did indeed close above it. Now today comes around and we're gapping a little bit lower, and also throughout the day we were closing candles below that low. We actually had a nice trade utilizing this breakup candle low near that area. We'll go over that when we go over to inside the numbers. But really what I wanted to show you guys, and this is why we're talking about it, is that we broke the inside bar pattern formation and closing candles below this low. So that is some bearish behavior. On top of that, we did manage to come up short of this gap from yesterday. The gap comes in at 665.69. Today we made a high of 665.12, coming up short of the gap. That is some weakness. So as long as we continue to close candles below this low of the breakup candle, and on top of that, start to close candles below the pivot number, then the market's pretty much telling you that we have some more downside potential. Breaking this low was very important, but also getting below that pivot number is even more important. And just looking at the extended hours right now, we're already poking our heads through the pivot towards the downside. So I do think we have some more downside potential, and also we have to keep in mind that we're very close to home base. The market being extended this long from home base is definitely going to want to go for a little test of home base. Make it finished business. We're already very close to it right now. I want you to get your sticky notes out because I'm giving you 2 very important numbers, and it is possible that we can reach it this week. One of the numbers comes in at 650.30. We can call it 650 for simplicity. It's a big fat round number. The markets are attracted to those numbers, and it's a little spike of the 100 period moving average as well. And then down below, we also have a number, and I mentioned this number a while ago, sometime in October when we had this woodshed day, but that number comes in at 647.24. Therefore, this is creating a zone of support. How you doing? Write those numbers down and put it on a sticky note. Very quick lazy swing trader intermission break. We had Dell Technologies hit its first profit target today from an entry price of 121.29. This trade was issued November 17th, so yesterday, and we already hit our first profit target, locking in the risk-free emotionless trade. We had 2.98% gain, little base hit. Base hits put you in the Hall of Fame, put our stop to break even, and now this becomes a risk-free emotionless trade. We never let the remaining portion go bad on us. So it's a very nice trade for lazy swing trader members. If you took it, leave a comment down below. And with that said, nice trade. Off to a pretty good start in November. Also, by the way, don't you think that was a pretty good area to take some profit? We know our numbers. This is what you guys have been waiting for. We had such an amazing day going 3 for 3 with trading the Spiders, and we had a whole entire laundry list of traders making money. If you took any of these trades today, leave a comment down below. We're going to go over each of these trades one by one and break it down. So right now we're looking at inside the numbers, the 0 dark 30 notes. We got a lot of notes for the morning, but if we scroll up, we can see a little bit of a condensed version of it. At 9:10, what's the scoop for today? The pivot at 662.75 up to 663.75 can be utilized as overhead resistance on the way up. On the flip side, we have the first area of support that's going to be at 66120 for a potential spike to low and rip it right back up trade. First, we could start with the spike the low and rip it back up trade. To the right of the vertical line is today's activity. We got the first number on the board. This was the first support number at 66120. And as you can see, a little spike the low and rip it right back up trade. Made a high of 66426. So that was definitely a nice chunk of points. What low were we spiking? Well, it was this low right here. A very simple and classic spike the low and rip it right back up. What about the second trade of the day? Going up towards the overhead resistance zone. We got those numbers on the board. As you can see, we spiked through the front end number at 66275, made our way up towards the back end number at 66375, started to come back down, closing candles below, and then look at this beautiful move down. So this was our second trade of the day, and you can see exactly where it came from. This zone right here, and obviously there were numbers that had worked out prior to the morning, but it was right in the area of this breakup candle low. The exact low was pretty much the midpoint of those two numbers. And in the morning, as we were gapping below that low, the market could have easily used it as overhead resistance on the way back up, which is exactly what happened. I say this all the time. These are important areas for the market, so they can either be utilized as support on the way back down or utilized as overhead resistance on the way back up. Yesterday was a perfect example of how we used it as support. We spiked it by a little bit, but we did find support at that low. And now today, we used it as overhead resistance. We were never able to close candles above this low. As you can see, 927, 3 minutes before the opening bell. First overhead resistance zone, 66275 to 66375, and then the first support number down below, spike the low and rip it right back up, is at 66120. This is all laid out to you, the morning game plan before the opening bell. And then scrolling up, we can see 933, that was the first trade. Again, scrolling back up, 942, she's giving you the double right now. Book some profit, don't let the remaining portion go bad on you. That was another nice trade. And then right here, this was the third trade of the day. At 1003, the next support number down below is at 656.80. And then we had a zone down below. But we don't even need this zone because take a look at this. How you doing? What was the low right here? The exact low is 656.80. Nailed it right on the frickin' dot for a nice bounce in the other direction. So we had a total of 3 trades today, 3 of them were a success, and a ton of traders made some bank today. As always, you can pause the video, read the notes, and go back to the chart to double check the work. Everything's in here for you, the morning game plan, the intraday updates, the afternoon write-up, literally everything that you need to be a successful and profitable trader. Today could have been one of those days where you just pay for your subscription right off the bat. I mean, just take a look at this laundry list of profits we had today. Absolute insanity. That's inside the numbers in the live room. If you purchase the live room, you get inside the numbers for free. Let's go take a quick trip around the world and take a look at some of the other markets, starting with Camp IWM, my #1 favorite market leading indicator. So a little bit of a divergence. We're up 0.31%. Yesterday we closed below the 100 period moving average. That's this purple line right here. And then today we tested it towards the upside, but we're still closing candles below it. But here's what's really interesting information, and definitely a puzzle piece that's on the board. So if we go over to a 2-hour chart, remember, we always have to take a look at these different time frames to get different perspectives, because what's happening on a 30-minute hourly chart might not be the same situation paired to a 2-hour, 4-hour, or daily. The higher the time frame is, the more dominant it is. So here's what we got. Yesterday, right here was yesterday's close, and as you can see, we did happen to close below this breakup candle low at 233.27. Now fast forwarding to today, as of right now, and it's kind of close, but we are closing candles above it. So yesterday we were closing below it, and in the spiders, if you remember correctly, we were closing candles above it. And now today, it's the flip side situation. And on top of it, IWM is up today and the spiders is down. So in my #1 favorite market leading indicator, we are getting some mixed signals right now. So Camp IWM is at a very critical place right now, showing a little bit of indecisiveness. We can still use that 233.27 number, this breakup candle low, as a short-term pivot number. Closing candles above it, which we did slightly today, we can work some more numbers towards the upside, maybe start working on this breakdown candle towards the high of this breakdown candle. Of course, we're going to have those numbers ready for Inside the Numbers and live room members. But on the flip side, we do have to keep in mind that we're still continuing to close candles below the 100 period moving average. That's 2 days in a row right now. The trend is down right now. And also we have some important numbers that we need to test towards the downside. You should already have these 2 numbers written down on a sticky note. This is a potential zone of support for Camp IWM. One other thing that I wanted to mention, and this is going to be important in the longer term, not necessarily right now, but we do have the convergence of the 20 and 50 period moving average. Now, you're probably asking, why does that matter? Well, it could definitely matter for a few different reasons. Reason number one, if price were to come near this area at the convergence of those moving averages, it would be some key overhead resistance. You got this breakdown candle high along with a gap right above, coinciding with the convergence of the moving averages. So it's a little bit of a full stack situation, but the other reason why it matters is because now that we're crossing those moving averages, the 20 period moving average will likely continue down, and the 50 period moving average will just continue to go out like this. Now, the reason why this would be important towards the longer term is because as we're crossing moving averages, we would start to take note of the spacing in between those two moving averages. The bigger the spacing is between the two, the stronger of a trend it is. For example, right here in this area, when we had all of the moving averages converge at once, price started to get below the moving averages, and we were in a downtrend, but the thing that we were able to take note of was the spacing when the moving averages converged. The bigger the spacing is, the stronger the trend. In this case, the stronger the downtrend was. And you could also look at it from the 20, this orange line, to the 50. You see that the spacing in between gets wider and wider as we continue to go down. Another example is right here, when we converged the 20 and the 50 moving average. As you can see, when we converge, the spacing continued to grow, and then it narrows out a little bit. The spacing is very important to see how strong that trend is, whether you're in an uptrend or a downtrend. And going back to current price, we can see that we're in a downtrend right now. So paying attention to the convergence of these moving averages and see how far apart they get from each other is going to be very key for the future. What's going on in my second favorite market leading indicator? The transportation department. We're down 13 cents, so pretty much 0% today. But even though that there was no change, the destinations that we arrived to today are very important. For example, we utilized that trend line that we've had on the board for quite some time now. We utilized it as overhead resistance on the way back up. And on the flip side, we almost made it down to the pivot number. We came up a little bit short. The low is 15,665 against 15,650. So a little first time, best time situation. But what's important to gather from today, even though on the surface it looks like nothing really important happened, but we can obviously see that we're closing candles above the pivot, but we're also closing candles below that trend line. So we're in a very critical spot in the transportation department, just like we are in Camp IWM. It's a little bit of indecisiveness. Tomorrow we can easily go back towards the pivot, maybe even start getting below and closing candles below, but we also have to take into consideration that trend line as well. The market obviously knows about that trend line, using it as overhead resistance, then getting above it and using it as support, and now we're going back to using it as overhead resistance. So tomorrow, a few things can happen. We can get over that trend line, maybe start to climb this breakdown candle high near the vicinity of the high, but a major tell is going to be where we close candles, either above or below, in addition to where we close against the pivot. I do think we have some more downside potential just from looking at where my number one favorite market leading indicator is at, Camp IWM, where the spiders are at. Let's take a quick look at the Q people. We're down 1.22%, $7.35, coming up short of this number that we put on the board yesterday at 590, call it a big fat round number. Going over to a 2-hour chart, you can see very similar situation compared to the spiders, closing candles below this breakup candle low. We used it as overhead resistance on the way back up. We missed the gap up above, just like the spiders did. That is showing some weakness, not to mention we also have the convergence between some of the moving averages. You have a convergence between the 50 and the 100, and then a possible convergence soon at the 220. So I definitely see some more downside potential. So just looking at this in a technical analysis perspective, below a lot of key important numbers, coming up short of some key important numbers, below some of the moving averages on the weekly chart, wanting to head towards home base. But the market's job is to trick, trap, fool, and frustrate as many traders as possible. You have to keep in mind that nothing moves in a linear line. Market moves up, eats time off the clock, has another move, market moves down, eats time off the clock, maybe a little fake out situation, and then a continued movement. So we have to understand that nothing moves in a linear line. But looking at the bigger picture perspective, I do see us heading down a little bit lower. At least going down to test that 20 period moving average, home base. We could have a little spike through it, maybe take care of some numbers down below. You have some key important numbers in this area. Also, there happens to be an unfilled gap right here. So there is some unfinished business, but I just can't imagine we come up short of home base after being extended for all this time. Markets don't like to be too extended from home base. We all know that. This move is pretty much dedicated to going back and test home base. With the Qs, IWM already hit home base, the spiders are close, so I just can't imagine we come up short of it again. Obviously, we have to take into consideration that nothing in the market is 100% certain. We're the umpires calling balls and strikes. But just the fact that we know that markets don't like to be too extended, we use it to our advantage to put the odds in our favor. And that's where I think the market is heading to. Home base. All across the board. What about XLF, the financials? We're down 0.16%, still playing some defense around the 200 period moving average. Found a little bit of support on it yesterday. Today, we're pretty much closing right on it today. We tried to get going, tried to climb this recent breakdown candle. Couldn't really get anywhere with it, and now we're just closing at the moving average. If we start to get below and close candles below, then guess what? We're below all the moving averages, meaning we're bearish. And we have some important numbers down below. One of them being a big fat round number at 50. Call it 50 to 49.84 give or take. On the flip side, if we do manage to get back above the 200 period moving average, we already know that price is going to want to try to climb this most recent breakdown candle, the high of it. The exact high happens to be 52.49. Call it a big fat semi round number at 52.50. Last but not least, we got SMH shaking my head, this semiconductors, smash mouth. We're down 2.06% today, so a nice decent sized down day. Now we are below the 50 period moving average on a daily chart. As you can see today, we ran up towards that moving average, utilized it as overhead resistance, coming up short of this gap right here. Some bearish behavior. Now it doesn't mean she can't go ahead and complete it tomorrow. Same rules apply to the spiders and the Qs, but coming up short right now is a little bit of weakness, along with closing below this breakup candle low and the moving average. We have a number down below at 324.85. That is an important number. It's the low from this breakdown candle. You also got a breakup candle low coinciding with it. It's also a previous breakout area, and it also happens to coincide with a big fat semi-round number at 325. Also the midpoint between the 50 and the 100 period moving average. I smell a little bit of a full stack formation. That number should provide a reaction at least from an intraday perspective. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true, inaccurate information. Put it on a sticky note. We're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐿𝑰𝐿𝐼. We'll be back ready to go in uniform for tomorrow's session. We got hump day on the on deck circle, and of course we'll be back for the video later that night. I hope every single one of you has a great rest of your day. Stay safe and take care now, folks.